Hi, this is Zach Muir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 8th of February. And some decent charts here today and some decent targets hit over the last couple of sessions. Starting off with African Pioneer, and you can see that previous call was at above 3.5. We could get to 4.5 or maybe 4.75, and it looks like the shares are on their way. I suppose the main battle now, we're trying to work out what the next target would be after 4.5, but maybe stay tuned to see what that would be. But hopefully we'll hit 4.5, etc. over the next 24, 48 hours. Only an end of day close back below 3.5, really delaying the upside scenario. Onto a stock which is heading vertically, or it has been heading vertically in a serious fashion over the recent past. Here we've got Beowulf Mining, and I suppose the lines to look at the moment really are probably not that one anymore. We can get rid of that one, but effectively the rising trend channel that we've had in place since September, shares making good progress within that channel, and the view is that while we're above the floor of the channel there around 14.5 pence, we could head up to as high as 25 pence over the next month to 6 weeks. So looking pretty strong in there. What's also strong and encouraging is the way that new support has actually twice come in above old resistance. So we'd had that in December versus the 6.5 pence level, and then we've had that in January versus 12.5 pence. So really heading higher in a decent fashion. Doesn't really get much more bullish than that, apart from having gaps on the chart, which so far we have not had. Good to see this stock start to move now. Cyber. The message seems to be getting through regarding the company's very privileged position in the cybersecurity space. That means that we can probably get rid of that particular line and then look up towards the April resistance line at the top of that broadening triangle from the spring of last year. A good, decent setup here with the gap higher, unfilled gap to the upside higher in the middle of December. Sideways shuffle along the 50 and 200-day moving averages, which is normally a good thing to do. Just waiting for a breakout now through 2.2 pence on an end-of-day close basis. They call that the neckline resistance to give us 3.5, maybe by the end of next month, or hopefully a bit sooner. Massive resource update from Eurasia Mining. Plenty on offer there, the nickel, the copper, etc., etc. One would assume that after four or five tests of the low 20s area, this should and could be the last. If you're waiting for a trigger in terms of the next push to the upside, probably an end-of-day close above the 200-day moving average at 23.3 pence. Should then take us back into the low 30s. But I have to say it's slightly frustrating that we've been sideways here for the post-September period between 20 and 30 pence. So I suppose the real action here would start when we break the 30 pence level. A stock which has had a textbook chart over the recent past is GCM Resources. First we had the break of the resistance line there from March last year around 5 pence. Beautiful mid-move consolidation either side of the 200-day moving average, which tends to be quite typical. And the bull flag breakout there means that we should be heading towards the 9 pence area well before the end of the month, and maybe the way things are going by the end of this week. If you're a fan of the shares looking for greater glories, maybe 10 pence at that June resistance line projection is now on the cards, given the way that we've had such a smooth break higher from the shares. Really has been quite impressive indeed. Onto a stock which doesn't get much airtime here, but it's here today, Ixico. Just looking at a potential situation where there's a bear trap rebound. So the old low there in December at 48 pence, end of day close above 48 pence, should be, or could be regarded as a plus point for the shares. And the other plus point to note is that we've had the lower low for February, and we've got a bullish divergence line there in the RSI window, so that also hints that we might have a rebound on an end-of-day close above 48 pence. Initial target here filling the gap up to 58 pence, but obviously this is not exactly a momentum trade. This is trying to catch a falling knife, so bear that in mind. Onto a stock which has been requested by a friendly Twitter follower. Here we've got Live Company, and got that sort of sideways shuffle along the 50-day moving average, which tends to be decent, obviously as long as we remain above the 50-day moving average, so 3.3. The support there We had a bear trap below the old November support, so a bear trap below 2.8, which is, let's say, the first buy signal for the stock. The second is that sideways shuffle along the 50-day moving average, and maybe the third signal there, the bullish divergence line that we've got here in the RSI window. So that does suggest that we could flip up to the main resistance here towards 5 pence over the next 4 to 6 weeks if we remain above 3.5. So maybe one to watch over the near term. If you're cautious, maybe you wait for an end of day close through the January resistance around 3.9 pence. Moving along to a stock which is maybe more of an easier chart to get a grip on. We've got Petrometad, beautiful rising trend channel there from back in November, top of the channel there heading towards 5.6 pence, and the way things are going, I suppose we'll probably be looking for more than that. 5.4 pence is the top of the gap down that we had in July, and I suppose if we get a weekly close above that, then we could be on target for a retest of the best levels of last year at 9 pence. The chart does actually look that good given the extended base, the neckline break, and then the test of the neckline as new support. So things shaping up quite nicely there. New Formix also back in the frame here on the basis that we've had so I suppose a double bear trap just below the December support. The December support was around 103, and we had a couple of dips below that, and then the gap higher today. So gap higher off the lows tends to be a reasonable signal, and that could at least get shares up to 1.6 pence, the 200-day moving average area over the next few weeks. So something to look out for there. The other point is that we do have a bullish divergence line there from back in December, so that does suggest there is some momentum building for New Formix over and above today's 13% rise today. Onto a stock which has been requested, another one, Open Orphan, and here we see the shares I suppose consolidating near the lower levels. What you really want to see here is an end-of-day close or a weekly close above the 50-day moving average at 20.6 pence. If we can get that, then it would be up to the initial January resistance around 25 pence. So maybe there's a trade on there on a momentum basis if we get a decent break of 20 pence. Don't really see the shares going any lower than they have. We've got a higher low for January versus December, and we remain above those lows around 17 pence quite well in the meantime. No such considerations in terms of trying to work out support for Pantheon Resources. Here we had rather ambitious looking resistance line there from April up to 120, well, I suppose 122, something like that. In fact, we've overshot it, and the shares seem to be rising as I speak to 128. So the only thing now is to try and work out if there's another target to shoot for. I would say that could be as high as that line of resistance from August, which is up to £1.73, which could be hit maybe by the end of next month. The way things are going, probably the end of the next week. But 173, a possible target there over the near term, especially while we hold above yesterday's high at £1.16. So the risk reward reasonable if you are a momentum trader. So let's see if Pantheon can deliver the goods. Finishing off with another request, Tomco, which had a rather interesting bear trap reversal, 2-day bear trap below the old support from July at 0.48. Above that, we were looking for the gap to be filled up to 0.62. But if we can get through that, then that would suggest that shares of Tomco are back. We just need to get through that 0.6, 0.62 level really to get to return the shares to the top of the range, 0.75. But it does look like there's been a bear trap gap reversal, and Tomco is back in the range, let's say 0.5 to 0.75 over the near term. That's it for me today. More updates tomorrow.